If you run a civil construction business in Australia, you are operating in one of the most capital intensive industries in the country. Equipment costs are significant, project timelines are long, and payment terms on government and commercial contracts can stretch well beyond 60 days. You are funding labour, plant, materials, and subcontractors out of your own cash flow while waiting for progress claims to be assessed and approved. Traditional banks are challenging for civil construction operators, particularly smaller businesses and sole traders. Your revenue is contract based, your expenses are front loaded. And unless you have substantial commercial property equity, banks tend to be cautious. Non bank lenders take a different view. They understand project based revenue cycles and assess your application on your actual trading performance. Unsecured business loans are the most accessible starting point for civil construction businesses needing working capital quickly. You can borrow between $10,000 and $500,000 without pledging property as collateral. The lender assesses your last 3 to 6 months of business bank statements and your average monthly revenue. Approval can come through within 24 to 48 hours. The interest rate is higher than secured alternatives, but for bridging a cash flow gap between progress claims, covering subcontractor costs, or mobilizing for a new contract, the speed justifies it. Equipment finance is particularly relevant for civil construction. Excavators, graders, compactors, tipper trucks, trailers, and site equipment represent significant capital outlay. Equipment finance uses the asset being purchased as security, keeping your property free and your personal exposure lower. Rates are more competitive than unsecured loans, and the tax treatment is generally more favorable, with depreciation and interest both potentially deductible. If you are investing in plant to win or deliver a specific contract, equipment finance is usually the right structure. A business line of credit suits civil construction businesses managing multiple contracts at different stages. You draw what you need when you need it, repay when progress payments land, and only pay interest on the balance you are actually using. For businesses juggling several active projects with different payment cycles, a revolving facility is significantly more efficient than a fixed term loan sitting on your books. Invoice finance is worth considering if you are working with government bodies, tier 1 contractors, or large commercial clients on extended payment terms. You can advance up to 85% of an outstanding invoice immediately after issuing it, rather than waiting out the full assessment and payment cycle. The invoices themselves are the effective security. For larger borrowing requirements, a secured business loan using property or significant business assets as collateral gives you access to bigger facilities at lower rates. If you need to borrow above $500,000 for major equipment purchases, business expansion, or a large contract mobilization, secured finance is worth exploring. Approval takes longer due to valuation requirements, but the cost of borrowing drops considerably. How much you can borrow depends primarily on your monthly revenue and trading history. Non-bank lenders typically base unsecured facilities on 1 to 2 times your average monthly revenue as a starting point. A civil construction business turning over $1 million annually can generally access $80,000 to $200,000 unsecured with clean bank statements and no significant credit issues. Add property or equipment as security and that number increases substantially. Businesses under 6 months old will find their options more limited. Most lenders require a minimum of 6 months trading history, with 12 months preferred for larger facilities. Keeping your business bank account clean, lodging BAS on time, and building a clear revenue track record are the most important steps you can take to strengthen your position. When lenders assess your application, they look at your bank statements, your trading history, your personal and business credit profile, and your business structure. Having a registered ABN, a dedicated business bank account, and current financial records makes the process significantly smoother. Most non-bank applications are completed online in under 15 minutes with your ABN and business bank statements. A commercial finance broker can identify the lenders best suited to your profile before you apply, protecting your credit file from unnecessary hard inquiries. Brokers are paid by the lender on settlement and do not charge you directly. Use the free business loan finder at Reliable Business Tools to find out which loan type suits your civil construction business.